everybody, BT here with FXLiveDayTrading.com. I want to touch on a simple strategy for trading that I was actually taught on when I learned at a Wall Street firm, a small firm, and they were teaching one of the first things is just using moving averages to go ahead and get in and out of trades. These were primarily based on short-term trades, and many different people have their different tweaks that they utilize. I personally just stick with the SMA, and on this chart here you'll see the 30, 60, 120. I just like to use these to define exactly what direction I'm looking to take a position. In this video you'll see right about here is where it looks like the party is over for the bears. You can see we held this key level that we mapped out in our trading room. You can see that we bounced off of this key level, but when did we bounce off of the key level? We did so on the cross of these moving averages. Okay, as soon as it kind of passed above the moving averages, many algorithms work off of that as well. A move above specific moving averages that are outlined in their algorithm, which is nothing more than just as sophisticated as we know. People who do use MT4, and I don't even use MT4 a lot. It's called an expert advisor. Okay, so just think of something similar to that, but a lot more sophisticated and actually something that works really well. Not these, robots that you may, go on a website and they'll be selling it for $200-300 and it's going to make you all this money. Not that nonsense. We're just simply talking about the way algorithms are programmed, and normally again, I don't want this to be a video on algorithms, but just keep in mind is once you pop up above important moving averages, at that point, whether it's a human trader or a robot trader, let's say they're short, or let's say they just triggered a buy, a lot of times, and not all the times, you'll get a little pop. Okay, so the criteria here for some traders, let's say they're trading at a bank or they're trading at a firm, and the firm says, you know what, you want to go long here, and one of the rules at this firm is you want to go long when the exponential moving averages are lined up properly, and you can only go long if the price action is above that level. You can only go short if the price action is below that level, so on and so forth. I think you get the point. The point is, the move above specific moving averages is a trigger, and often that trigger gives a green light to traders, whether they're robots or whether they're humans. Alright, we can play on that as traders by watching for these specific levels, looking for our supports, looking for our resistance, being disciplined. You're going to have trades that are going to lose. Okay, when you're doing that, you just want to cut down on your sizes, and that's what I do. Sometimes I'll just go through a losing streak, and even though I'll be losing, I'll be cutting down on my sizes. So one way that I have noticed is if you stick with specific rules, moving average rules, such as this, I feel it can give you an edge. It's my personal opinion. Alright, you can see on the daily chart, we did get a cross of these moving averages. And when we got that cross, what happened? We got the drop. Once again, euro yen here. We got the drop. Now, where did we get the drop? We got it right here at the support level that we outlined. So we got the drop to that level. And we'll see. Monday's going to be very interesting. Is it going to be a little retracement up, or are we going to continue down? Hard to say right now. Okay, now if you're a higher time frame trader, like the 4-hour, you're not getting your signal. So you're probably just standing aside if you're not short. 30-minute chart. It's starting to look pretty. Let's jump to our 1-hour chart. See what that's telling us. 1-hour traders, what are they seeing? Well, they're seeing something that looks very similar to the 30. We got above our main moving average, which is a 30. We popped when we did do that. You see that right there? Okay, now where's the next stop? Well, the next stop could very well be right around 140. This is just an example. You know what? We can drop too. So jump to the 15. What do we have? Well, we have several moving averages now that are our support, and now we have 1, 2, 3 that are below us. Okay, so short-term moving averages were basically telling the trader, yes, indeed, stay in if you're using the strategy. Alright, any rate, real simple video. Alright, you probably know these things, but sometimes it's good to just rehash them. And there's many different combinations of moving averages. You'll find a lot of people use the 20, the 50. Some will use the 20, 50, 200. In this case, it's the 30, 60, 120. Whatever it is, the bottom line is you buy when you're making a move above the moving averages, and you're selling when you're making a move below these particular moving averages. And that's it. That's the video. I don't want to go over 6 minutes here on this video. Everybody have a great trading week for this week, and I'll try to make a few this week. Have a good one.